We are bouncing over to CME Group now for today's market movers from CME Group as pro traders share their options and futures trades.
Welcome to Market Movers. I'm Jim Iuorio with Scott and Mark.
Hi, Jim.
Okay, so rates are on the move again. Fed eased. The curve is steepened. It seems like it's just this risk-on environment thing. Is this something that's going to continue?
Yeah, I believe so. I mean, the market feels pretty buoyant here. I would add in, Jim, the fact that we're coming off a pretty nice earnings season with respect to expectations being accelerated or at least exceeded. So to me, it makes sense that we're seeing in this risk-on environment, which is great to see, by the way, that the curve is steepening and going back to a normal position.
Okay, crude and 10-year yields have moved somewhat correlated over the last 6 months. Are they correlated together? Are they directly? Or is it just that they're marching to the same drum?
Well, it could be the same drum or the same music, as you will, depending on the instrument of choice, my friend. But the one thing that's interesting to me, too, though, is I've seen this before where they do correlate and then they don't correlate, in the sense that investors look for other asset classes besides equities to maybe hedge risk.
Before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. We're going to talk about the 10-year. We're going to talk about the crude contract.
Yeah, our good old friend, the crude contract, CL, Jim. Because, as I mentioned, just talking about maybe some other asset classes that one should be looking at to maybe hedge away from equity. An asset class that I think I found a nice example in, by the way, that maybe has a little bit more, say, upside to it than maybe the equities do, given where we are in the ES. So today, Jim, looking as an example at buying a 58.59 call spread in crude oil for 45 ticks. This trade risks 450 to make potential 550. It expires December 16th, but has the January futures contract underlying it at 57.5. This takes you through an OPEC meeting and takes you through some possible news from Saudi Aramco deal, finally, potentially. So it's got a little bit of a lift needed in there in the crude contract, but I feel with all that stuff coming down the pike I just mentioned, crude is likely to bounce or continue to bounce here. I like the way the chart looks as well.
I like this trade for two reasons. One, I like the direction. Of course, you mentioned Saudi Aramco. You know that they probably want crude
I would think
higher.
they would, yes.
But two, I like the fact that we're talking about something that gives you almost 5 weeks or something, and it's less than a 50-50 proposition, and crude's been whipping around in huge swings. So if you get less than a 50-50 proposition that crude's up here or crude's down here, I think that's a relatively good way to express it.
Thanks.
I'm looking at the 10-year, and I think prices are going lower and yields are going higher. And I'm looking at one of these broken put flies. We talked about this, and I've had some decent luck with these before. So it's the week 3, November, the 128, 127.5 put spread, then selling the 127.5. 127.25 put spread. So it's buying a 50-tick wide put spread, selling a quarter-tick wide put spread with the same pivot in the middle. And it risks $93 to make 407. It expires November 15th, so you have a week and a couple days. The reason I like these better is with a regular put fly, you have to pinpoint it so accurately to the price. In this one, if I get the direction right, I still can make some money, even if it overshoots the middle.
If I may say, you have a pretty nice risk-reward potential there, my friend, which also, though, I believe gives you a chance to manage maybe those levels if for some reason, like you said, you get some additional volatility that creeps in there in yields.
Quick question, is one of the reasons the curve is steepening because we're starting to sniff an end to the China trade war?
Could be, and it could be the fact that maybe, I mean, this sounds crazy, but maybe those 3 Fed rate cuts are finally working with respect to getting into the system, stimulating the economy, and therefore pushing the curve back to where it should be.
Thanks for joining us on Market Movers. I'm Jim Iuorio, where we are helping to make you a better trader.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.